don't expect to see a significant reshoring of production to North America in the next 4 years. That's according to new research from the Economist Intelligence Unit. To talk about it, I'm joined by Andrew Viteritti. He is Commerce and Regulations Lead with the EIU. Hello, Andrew.
Hi, how are you doing? Good to be here.
Good, and thank you very much for joining me to talk about this. So what was the basis for your research with this new paper? Where did you get the information?
Yeah, sure, good question. So essentially all the information came from our own forecasts. As you might know, with the EIU, forecasting is what we do. It's our bread and butter. And essentially we were responding to a growing sense of optimism that we're seeing here in the US about the prospects for bringing production and sourcing, and essentially supply chains, back or closer to home. So what that means is reshoring supply chains back to the US, or more realistically, bringing them back to North America at large. And it's interesting because this conversation that we were responding to, it's one that's not new. So we've been hearing about opportunities and the benefits of reshoring for some time, especially going back to the start of the US-China trade war, which of course started under the previous administration of Donald Trump. And of course, those conversations accelerated and gained more momentum and really a greater sense of urgency at the onset of the coronavirus COVID-19 pandemic earlier last year. They developed even further in the North American context with the implementation of the US-Mexico-Canada Agreement, USMCA, the new NAFTA, which was implemented last year. But it's interesting because this optimism that we've seen is somewhat new, and it really developed since the new administration of President Joe Biden took office earlier this year. Mm-hmm. And so that was kind of the context that we were writing our paper in, and it was that optimism that we were responding to. And ultimately, what we concluded from our research and from our forecast is that optimism, while understandable, is a bit overblown.
You say a bit overblown. In what sense exactly? Are you saying that we're not going to be seeing any significant reshoring? There'll be some. And if not, what are some of the issues that would prevent that from happening?
Sure, that's a good question. So we do expect there to be some reshoring. We're not saying that none will happen, but we're not expecting to see the kind of widespread wholesale reshoring that some of the optimists that we've seen here in the States, be they policymakers or business associations or certain think tanks that have written recently on the topic that they're expecting. And there are a couple of reasons for that. And I'll name four. I'm going to try to be as brief as I possibly can, okay. But we can address each of these reasons individually a little bit later. So the first would be the relative resilience that we've seen in Asia when it comes to its economy and trade in the face of COVID. So the region proved remarkably resilient when it came to trade amid COVID. Asia's exports recovered faster than exports from any other region worldwide last year. They recovered to their pre-coronavirus, so 2019 levels by the start of this year. And a lot of that had to do with the relative success of coronavirus mitigation measures that were implemented by governments in the region. Now, of course, anybody who's been reading the news lately has seen growing concerns about new infections in Asia of COVID, and a lot of this has to do with more contagious COVID variants, and there are also concerns about new lockdowns going into place. But we're holding by our forecast of the EIU that we're not expecting this to rattle Asia's position, and especially the position of China as being a leader of the global trade recovery from COVID. Essentially, we're expecting that these lockdowns that will go into place, if they do, and when they do in Asia, they're not going to resemble what they did at the start of the pandemic. They're going to be much shorter, much more targeted, and also won't be disruptive to trade and to production. So that's one reason, the relative resilience of trade and the Asian economy in the face of COVID, which we continue to expect to go on throughout the near term and through the medium term. Another reason has to do with the business opportunities that are available in Asia. So the region is chock full of them, especially when it comes to Asia's large, diverse, and growing consumer market. And so we expect that that's going to discourage businesses from thinking about moving out of the region, moving their supply chains out of the region. They're going to want to be close to those markets, and they're not going to want to take that opportunity off the table, so to speak. A third reason, I mentioned that there would be four, so I'm going to try to get through these last two as fast as I possibly can, has to do with what we see as being a relative lack of competitiveness in North America. So it's interesting because we've seen with the new administration here, the Biden administration, that they've signaled that America is back. So America is a willing and able partner for its traditional allies, and that's fine. But it's interesting because we're still seeing that there's a continuation of protectionist policy in North America and also here in the US, and that's translating into some cross-border tensions, especially in the North American context, and especially when it comes to the US-Canada relationship. So ever since Mr. Biden's inauguration, there have been questions as to whether Canada would get an exemption from his new Buy American restrictions and policies. There have been questions about whether we'll see a doubling of tariffs on Canadian lumber. We've also seen the US threatening to sue Canada over what the US sees as an insufficient opening of the Canadian dairy market per the terms of USMCA. And all of this, of course, is taking place in a context where we've seen some rifts between the two countries, especially over cross-border oil pipelines. And so, we've seen kind of these implications of protectionist policy here. Because of that, we've also seen the presence of protectionist policy in Mexico, which has been an enormous concern for businesses. Essentially, we have the administration of President Andres Manuel Lopez Obrador, AMLO, as he is commonly known, who's been in office since 2018, who's been pressing a very nationalist and statist agenda that has chilled investor confidence, and we expect that to continue throughout the rest of his term, so through late 2024. And that's very important because we see Mexico as being essentially what gives credibility to the reshoring potential of North America, because at the end of the day, production costs are very expensive, very high in the US and Canada, much higher than what they are in Asia, whereas in Mexico, they're lower in comparison to the US and Canada, and also they've remained pretty flat, even as production costs have been increasing in China, and even remain competitive relative to Southeast Asian economies, which are starting to become these lower cost alternatives for production to China. So it's really a big deal that businesses would be turned off from Mexico and will be for the foreseeable future. And then the very final reason, I promise I'll shut up then, is that essentially we see COVID as, obviously it's a big issue right now for businesses. It's driving a lot of business decisions, and understandably so, because it was a massive shock. But ultimately, we are expecting that as the pandemic becomes more contained, so as vaccines are rolled out with greater efficiency in a more widespread fashion, as new treatments are developed, and essentially as we learn, as businesses learn to operate more effectively alongside the pandemic, we're going to see COVID move down the pecking order in terms of priorities of what's driving business decisions. And we're going to see price and cost competitiveness reign supreme again, as it did before. And as that happens, this urgency around supply chain resilience and security, and especially looking at these opportunities in North America, they're going to start to fade into the background.
Well, let me just quickly touch on a couple of points that you made there. One is the growing economies of Asia become themselves great consumer markets for manufacturing that happens in Asia. But doesn't that speak to the need? We're still going to need a manufacturing base to serve North America. If the Asian manufacturing base is turning back toward Asia, doesn't that mean that actually speaks to the possibility of greater production coming here to serve our needs in North America?
Not necessarily, especially given all those reasons I mentioned before. If the costs are going to be too high, if it doesn't seem like it's going to be sustainable for companies to shift supply chains closer to home, or even to do that in a simultaneous fashion, right? So to keep supply chains operating in Asia when they're trying to service the Asian market, but also develop more local or closer to home supply chains for catering to the American market, that's going to be very costly. It's going to take time to put those systems in place. And also it's going to require a strong degree of commitment, because it's very difficult to roll these measures back and roll these business decisions back.
Long before, or a few years before the pandemic hit, labor costs in China were rising significantly to the point where it's becoming less and less favorable to produce in China, maybe still much more favorable than North America, but less so. Does that mean that if that trend continues, manufacturers, instead of coming to the North America because of rising Chinese labor wages, will simply go elsewhere in Asia, like Southeast Asia, where the rates are cheaper?
Absolutely. Yeah. And that's a trend that we've already seen taking
Mhm.
place. We saw that starting amid the US-China trade war, which we saw kick off a couple of years ago. And yeah, there is this movement that we're seeing into Southeast Asia, into these lower cost alternatives. And we expect to see that continue. But we don't expect to see that migrate back over to North America anytime soon, because
Yeah.
that region will remain very competitive when it comes to cost and production.
And really talking about two different things here. One is you're saying it's not so likely or less likely that production will come back to North America, but even less likely than that it will come back to the United States specifically, right? Are you seeing that also as a trend?
Absolutely. Yeah. And
Mhm.
that's what we stated just at the outset of our white paper that we published a couple of weeks ago, that, you know, we have seen growing optimism recently around prospects for bringing supply chains back home. And it's understandable, because the Biden administration has made supply chain security and resilience a top priority. We saw this right after Mr. Biden entered office. He put out his executive order with the supply chain review, and we've started to see the results of that coming out a couple of weeks ago. And of course, you know, we've also seen Mr. Biden, as I had said before, take a much more cooperative stance than the previous administration when it comes to foreign relations and relations with the US's traditional partners. And part of that agenda has included cooperation on
Yeah.
on supply chain security and resilience. But even with all these measures, we don't see it likely that that's going to translate into much of a change on the ground when it comes to the location of supply chains.
Not necessarily a message that North American interests or United States interests want to hear, but if that's what the facts are telling you, then it's valuable information to impart to us. Thank you so much, Andrew Viteritti of the Economist Intelligence Unit, for sharing the results of this latest research. I really appreciate your time.
Thanks so much for having me.